This video is a review of Honda's FY 2026 second quarter financial results, covering the period from April to September 2025. Honda Motor is a Japanese multinational corporation primarily known for manufacturing automobiles and motorcycles. For the first half, operating profit was 438.1 billion yen. In the motorcycle business, although sales in Vietnam declined, strong sales in Brazil helped maintain global growth, resulting in record-high sales volume and profit. In the automobile business, despite positive effects from price revisions, profit decreased because of tariff impacts and higher expenses related to EVs. Operating cash flow after R&D adjustment was 1,281.3 billion yen, which was about the same as the previous year. For the full year 2026, Honda expects operating profit of 550 billion yen and net profit of 300 billion yen. This forecast reflects lower production volumes due to the semiconductor shortage and slower automobile sales. Motorcycle sales are expected to decline slightly in Vietnam, but remain strong in Brazil and other regions. Automobile sales are forecast to drop, mainly due to weaker demand in China and ASEAN and the semiconductor shortage in North America. The full-year forecast has been revised downward, and the second half is now expected to post a loss, suggesting that the situation is more severe than anticipated. Unit sales in the first half. The motorcycle business recorded an increase to 10,763,000 units. A decline in Vietnam was more than offset by growth in Brazil, the Philippines, and other regions. The automobile business saw a decrease to 1,680,000 units, primarily due to weaker sales in Asia, particularly in China. In the power products business, despite declines in Asia and other regions, sales totaled 1,699,000 units, mainly driven by growth in Europe. Consolidated financial results for the first half. Sales revenue fell slightly by 1.5% to 10,632.6 billion yen. Operating profit dropped sharply by 41.0%, which also reduced the operating margin to 4.1%. Net profit declined to 300.8 billion yen, a 37.0% decrease. The yen strengthened against the US dollar, with the exchange rate moving from 153 yen to 146 yen per dollar. Overall, Honda's financial performance has weakened considerably. Change in operating profit. Operating profit decreased by 304.4 billion yen from the same period of the previous year, totaling 438.1 billion yen. Profit increased mainly due to higher motorcycle sales and price revisions. However, higher expenses, R&D costs, and foreign exchange losses offset part of the gain. Additional one-time EV-related costs and tariff impacts also reduced profit. Excluding the one-time EV expense and tariff impacts, operating profit is estimated to be 826.2 billion yen. As a result, profit declined significantly overall. Sales revenue and operating profit by business segment. Operating profit by business segment shows strong performance in motorcycles and financial services, while the automobile segment posted a loss. The motorcycle business achieved solid earnings, supported by strong demand in emerging markets. The automobile business recorded a loss, mainly due to higher costs and the impact of tariffs. The recent trend remains unchanged, with the motorcycle business maintaining strong profitability while the automobile business continues to struggle. Forecast for the full year 2026 unit sales. Honda's group unit sales forecast remains mostly unchanged from the previous announcement. In the motorcycle business, sales are expected to reach 21.3 million units, reflecting a decline mainly in Asia, but growth in other regions led by Brazil. The forecast for this segment remains unchanged. In the automobile business, sales are projected at 3.34 million units, mainly due to lower demand in Asia and the impact of a semiconductor shortage in North America. Forecast for the full year 2026. Operating profit has been revised downward by 150 billion yen and is now expected to be 550 billion yen for the fiscal year. Net profit has also been revised downward by 120 billion yen, bringing the new forecast to 300 billion yen. Honda has set its foreign exchange rate assumption for the full year at 145 yen per US dollar. Honda has lowered its profit expectations for the fiscal year, indicating a more cautious outlook, possibly due to weaker performance or external factors such as exchange rate movements or market conditions. First half net profit was 311.8 billion yen, but the downward revised full-year forecast is 300 billion yen, indicating a decline in the second half. Dividends. The annual dividend forecast for the fiscal year 2026 remains unchanged from the previous announcement at 70 yen per share. Stock price. This chart over the past year shows the stock price in Japanese yen at 1,585 as of November 7. This chart shows the stock price in US dollars at 29.81 as of November 7. Affected by the downward revision, the stock price fell by about 4% in after-hours trading following the earnings announcement. Current PBR is 0.52 and PER is 20.6. Dividend yield is 4.42%. Compared with historical PBR, PER and dividend yield, PBR and dividend yield are roughly the same. However, the PR is relatively high due to a decline in earnings, which lowered the earnings per share. The 4.42% dividend is quite generous, but this fiscal year the payout ratio may rise to around 90%. If there is no clear prospect for a recovery in earnings, it may become difficult to maintain this level of dividend going forward. Conclusion. Honda's first-half results showed solid performance in motorcycles but weakness in automobiles, leading to a 37% decline in net profit. Operating profit fell sharply due to higher costs, tariff impacts, and EV-related expenses. For the full year, Honda has revised down its forecasts, reflecting lower production, weaker automobile demand, the ongoing semiconductor shortage, and other external pressures. Overall, Honda faces a challenging second half, though the motorcycle business continues to provide strong support.